across the GCC, women hold 6.8% of board positions, which is quite low. That ranges from, I believe it's 2.8% in Qatar, all the way through to 14.8% in the UAE. So quite a range, but that average does sit at 6.8%. And this is something that we do talk about in our programs. And we also, as an institute, make an effort to build it into our conversations, if we're speaking in front of an audience, in front of a board, into our content, but also into our research, because we do believe it is one of our obligations to figure out what is happening in the region and share that with others so that we can change the situation or improve it.
Hello, everyone, and welcome back to another episode of Majlis in Markets. As always, I'm your host, Hassan Divraj. We surpassed 75 episodes, which is a really great milestone for the podcast. And please remember to like, share, and subscribe to this podcast. Remember, we're going to be on YouTube as well and audio. And remember to follow us on all social media platforms at Majlis in Markets. But now I'd like to introduce my guests for today's episode, John and Lisa. Welcome to the podcast.
Thank you, Hassan. Thank you for having us.
I forgot to introduce you guys. You guys are basically working for the GCC BDI. For our listeners and viewers who don't know too much about the GCC BDI, could you tell our listeners what exactly your organization is?
Yeah, thanks a lot, Hassan. I'm John Gollifer, and I'm the CEO at the GCC Board Directors Institute. And the way I often describe it is if you come from a country with an institute of directors, as is in the case for the UK, for example, we're a regional Board Directors Institute or Institute of Directors. We changed it to Board Directors Institute because we didn't want to be called an IOD like so many of our peers around the world. And the GCC is, of course, 6 countries. So we're not a national Board Directors Institute. We're a regional Board Directors Institute covering the markets of Saudi Arabia, United Arab Emirates, Qatar, Kuwait, Oman, and Bahrain. And essentially what we do, like IODs around the world, is we stand for promoting directorship, board effectiveness under the umbrella of governance. And governance, for those of you that are not familiar, is essentially about doing right by your organization for the people that matter to your organization, known as stakeholders. And they can be a variety of audiences. Most importantly, in our case, our employees, but also the members and partners who subscribe to GCC Board Directors Institute and support us. Of course, we have our own governance, so I report to a board of governors. And importantly, we work with many other stakeholders in the markets that we represent, including government, policymakers, regulators, the exchanges, and a variety of businesses from both the public and private sector.
Amazing. And Lisa, what's your role in this organization?
Thanks, Hassan. I'm Lisa Gulesserian, the head of professional development at GCC Board Directors Institute. So I lead the team that delivers essentially all of our board director education across the GCC. We have a host of programs that are designed to educate directors and board secretaries. And I can share a little bit, if your podcast listeners would be interested, I can share a little bit about our programming.
Yeah, absolutely. Please go ahead.
Great, thanks. So I'll start with the board directors. We offer 3 levels of certification, and this certification is based on what the IOD in the UK has offered. So we've sort of modeled our programming on their programming. The difference, though, is that we combine international best practice with local GCC market content. So our faculty is made up of both international faculty who come from all over the world, essentially, but also local GCC faculty who understand the market, they understand the participants, they understand what the governance needs are in the region. For the board directors specifically, we actually have 3 levels of certification. It's quite a comprehensive program. And we're proud to say that actually 450 directors across the GCC have actually been certified through us. The first level is a director certification, which focuses on teaching directors in the region the knowledge that they need to be strong directors, to promote board effectiveness, and to really walk them through what their role is as a director. That program is 4 modules, 8 days. The second level of certification is a diploma, where we move from teaching the director's knowledge towards teaching them the skills that it takes to be a director. And this program focuses on leadership. It focuses on board dynamics. They do a simulation, which gives them that hands-on experience in in navigating a boardroom dilemma. The last level of certification for our directors is the Chartered Director Program. And this program moves from, we start with knowledge, then we move on to skills. The Chartered Program actually moves them towards application. So they actually take what they've learned in the other two levels. They take actually what they've learned as a director from doing the work practically, participating in boardrooms practically, to actually implementing a project on the board that they serve. So this is a little bit different. They're not in a classroom situation. They're not with other peers. They're actually assigned an advisor who takes them through a project that they implement on their board, and then they're assessed on that implementation towards the end. And like I said, we've got 450 directors certified in the region, and we're quite proud of that, actually. We also have for our board secretary level as well, a very comprehensive program that takes our board secretaries in the region across essentially everything from A to Z on what a board secretary would need to know to help the board be effective and to work very well and effectively with the board chair as well as other board members. And for the board secretary level, we have 50, I believe it's 54 board secretaries now certified across the GCC, and that number is growing. This program, the demand and the interest in that has been just growing since I've been with GCC BDI over the last 2 years.
Hassan, I was just going to jump in. Yeah, because Lisa makes an interesting point around what we call the board secretary. In the UK, you would know it as company secretary. And coincidentally, I started corporate life as a company secretary to a subsidiary of a large British bank. And having joined the bank, I thought, why are they making me a company secretary? Well, the simple reason is, and what Lisa's been explaining is, there's a very important link between the non-executive board of directors and the executive team, particularly the executive management team. Important link between executive and non-executive, meaning those that are paid to do the job versus those that are paid to oversee and make sure it's actually happening, is this company secretary role, or as we call it in the region here, board secretary. So we consider that a key strategic role within any organization. And it's important that they're seen as they should be, which is as a governance professional that can make an enormous difference to the proper functioning of an organization.
Amazing. John, Lisa, I want to get a take for our listeners who don't know too much about, the IR investor relations industry. You both have like a really illustrious career. John, we met when you were at the Middle East Investor Relations Association, which is doing fantastic work. And I think they've just actually appointed a new CEO very recently. And we hope to get him on the show soon. But for listeners and viewers who don't know too much about IR and why it's important, could you give us or give our listeners and viewers, why is it important to have a functioning IR system?
Yeah, investor relations is a funny term. And again, I ended up in investor relations a bit like I did as a company secretary at the beginning of my career, sort of by accident without really knowing what it is. But when you think of the terms investor relations, it's exactly what it says. So whether you're a startup, whether you're a well-known company, including publicly listed companies, if you're essentially in the market for funding and you're taking funding from either debt investors or equity investors. So debt investors could, of course, be banks, which is the most obvious one, but other forms of debt investment, including bonds, be they corporate bonds, sovereign bonds, other types of fixed income instrument, or as investor relations is perhaps better known for the equity side of funding. So that would include shareholders, people who put their money into businesses, particularly listed businesses, in the hope that they'll get something in return, whether through share price appreciation or indeed through dividend payments, getting a total shareholder return. Of course, the difference between equity and debt is a legal obligation to repay both the capital amount plus interest or whatever you've agreed in terms of that debt instrument, while equity is generally riskier, of course, because there is no guarantee, having put the money in, that you'll either get a return through share price appreciation. Markets are funny things. They go up and down. They go all over the place, often for reasons we don't know. So the point of that type of investment is it's a long-term investment with a view to share price appreciation. And ideally, of course, some sort of stream of income, be it dividends or other. So they're very important in terms of any business at any level, as I've always said, because you need to look after that key stakeholder group as the providers of finance or funding. In which case, of course, having been an investor relations officer myself for a listed company, I'd argue that it's important, a bit like the role I just described as being strategic between executives and non-executives and making that process work in terms of decision making. rightly too, the investor relations officer acts on behalf of the issuer of debt or equity, or on behalf of the business in the eyes of the investment community, not just existing shareholders, but potential new providers of finance, be it debt or equity investors, and importantly, all the key influencers, be it analysts who write research on your business and give a recommendation to new investors or existing investors, or of course the financial media, including wonderful platforms like the one that Hassan's providing us today. So the investor relations role, like the board secretary role, is very key, is very strategic, and represents the business on behalf of management and the board in presenting and promoting what type of business and who it might actually fit in terms of the investment community. I hope that's helpful, but it's key in this part of the world, because if you look at the 6 GCC markets that I mentioned, so GCC being the Gulf Cooperation Council countries, then what's significant is that 4 out of the 6 are what we term emerging markets. So they're well on the way to developing not just their capital markets ecosystem, but also the form of funding that businesses that go public require. And then 2 of the smaller markets are what are known as frontier markets. And they're in the process of going from that category to emerging market. Beyond emerging market, of course, you become a developed market. But generally, having worked in emerging and frontier markets most of my 40-year career, I understand the dynamic of the market as a whole, the structure of the market, and the importance, as you asked, of that link between the business and the external investment community, and the opportunity that a good investor relations officer ought to make, just as a good board secretary ought to make, to running a business and making sure that it's run in the right way in the eyes of stakeholders, all stakeholders.
Fantastic. And John and Lisa, when I was a financial journalist working for the mainstream media, I was always used to interact with IRs or practitioners from the IR sector. So, for example, if a company didn't have like a public relations or media team, it would usually be dealing with the IR person. And I got talking to one of the ones in the GCC. I won't say which company, but they gave me like a really good insight on how important this role actually is. And this is the time back in 2017, 2016, when it wasn't as developed or as well known as it is today. So within that context, John, Lisa, how would you say that this industry, or the IR industry as a whole, or the ecosystem, I should rather say, has changed over the past decade or so?
Yeah, it's interesting, because I mentioned I've been in frontier markets, emerging markets all my career. And I'm always fascinated when I turn up and wonder how long I'll actually stay, that I often end up staying a long, long time. So this is now my 7th year in the GCC. And a lot of it's to do, I think, with being in a bit of a sweet spot. So it's become a sweet spot, particularly over the last 3 to 5 years. If you go back a decade in terms of investor relations or guidelines generally for particular roles, including, for example, that wonderful acronym, environmental, social, governance factors, or as we like to say, because it's easier to understand, sustainability, meaning running a good, proper, responsible business that's going to last a long time, which of course is what most successful businesses are all about and manage to do, whether you call it ESG or sustainability, or indeed think about the link with the market through investor relations. What's very interesting to me is the evolution has accelerated remarkably since the global pandemic. So a decade ago, when I used to visit as an outsider from the UK, you could see the exchanges, which I know well, having worked in an exchange for many years myself, putting in the building blocks, recognizing that their markets, their listed companies, were in a competition for attention of the investment community, including those key influencers like you, Hassan, but also, of course, potentially a competition for capital, whether competing within their market across their peer group or indeed other would-be competitors in other markets. And it's important to frame it that way. And I always use this term, competition for attention and competition for capital, because that's essentially what we're all in the business of if you're promoting a business on behalf of internal stakeholders to the outside world. And what we've seen is a very, very rapid evolution, as I mentioned, particularly recently, with the exchanges recognizing, actually, when you're looking at the GCC from the outside, you see a block. It is an economic block. It's also, to a large extent, a political block. But I think they've recognized it makes sense to also present it as a capital markets destination, which basically whether you go to one market or another, you'll ideally sort of get the same reception that you would expect in other emerging markets outside the GCC. And what the exchanges have started to do, which I think is very clever, is converge some of the guidelines around investor relations, around sustainability reporting, along with what we expect by way of annual reporting, quarterly reporting, which we have in the region, and so forth. And I think that sort of raised the bar for all. It's also raised that competition for attention and capital that I've mentioned. And I think it's no coincidence that if you look at the largest capital market, that of Saudi Arabia, given it's the largest economy, it's in the top 10 capital markets in the world as far as the equity market capitalization goes. And that's roughly a $2.5 trillion market, which is significant. If you add up the other 5 GCC markets, we have a total of $4 trillion in terms of market capitalization. So again, from the outside, you see a large block of markets, and you see different opportunities to invest in different sectors, given that each market is different and has different strengths. That sort of convergence between offering guidelines to all the issuers, whether in investor relations or whether in sustainability reporting, which I think is key to any responsible and sensible business for the long term, in my mind, has obviously boosted all the issuers. With that has come the recognition that if you're to build a critical mass of professionals, whether investor relations or indeed other important players, including governance professionals like board secretary, directors, and so forth, then you really, really do have to find different ways to work with different players. And the origin of GCC Board Directors Institute was actually GCC-based captains of industry who recognized we're not quite getting there quick enough and we're not quite doing the right thing. So why don't we support an independent, not-for-profit, professional body that promotes what we believe in? Directorship, given that they were on board. Board effectiveness, given that that's what they were trying to promote, and essentially giving the region a push by setting up an organization like GCC Board Directors Institute. Naturally, we would have national champions in the larger markets, and we applaud that, and we'd expect any country with a vision, which all of them have, to ensure that they develop their own capability and capacity. At the same time, as a regional body, as Lisa said, we provide that overlay, additional support through recognizing the differences in the operating and regulatory environments in each individual market, while bringing to bear what our governors expected from day one, 18 years ago, which is benchmarking against best practices in other markets. You can always learn from other markets. Every market has something to offer. And at the end of the day, when we talk about being good, when we talk about being responsible and sustainable, I think we all understand that from wherever we come. And that's the whole push behind GCC BDI. Benchmarking, bringing what we think is useful from the outside and implementing it on the ground while being sensitive enough and recognizing, as Lisa said, that clearly you need a ground-up approach to ensure that the players who are running the businesses and know the businesses better than anybody are getting what they require to be both responsible and sustainable. So I know that's a long-winded answer to a fairly straightforward question. What's the difference today compared to 10 years ago? I would say the first 5 years that I viewed of the decade were fairly ordinary by comparison to other frontier and emerging markets that I've been in. And then there was a big push, I think, not just from the exchanges, as I mentioned, but also from the regulators. There were also considerations around, well, hang on, if we're to get the next generation of entrepreneurs to find the funding that they require to diversify, to allow for economic growth, then there has to be another push. And I think the interesting law change was to essentially establish joint stock companies, which of course are a precursor for going public, and recognizing that a large part of the economy, while state-owned, is also held in the private sector through family businesses. And giving those businesses the opportunities to think about succession planning, to think about exits, to think about monetizing the value that they had accrued over generations made a lot of sense. So it's all happening very, very quickly, whether in the private sector or public sector with IPO pipelines. And it's no coincidence that in the last 3 to 5 years, as you know, Hassan, this part of the world have offered some of the busiest capital market activities, whether through primary markets or indeed increasingly secondary markets as well.
Yeah, I was just going to say, John, when we met last time for coffee, which was about a year ago, something just came to my mind was like, there have been some corporate governance issues in the GCC. I know these were private companies, but the most, I think I told you, one of the biggest regrets I have as a financial journalist was not following up on the NMC story at the end of 2019. And that was a bit of a scandal then. And, people can talk about things like Abraj, which obviously wasn't a listed company at the time, but it had a lot of corporate governance issues. But that in tandem with, what you just said about the IPOs. So do you think like this economic diversification, in addition to the past scandals and like lessons that could have been learnt, have been driving things like the development of IR for some of these companies?
Yeah, I think it's difficult to generalize, and you've given two good examples, but I could equally give examples from the UK or indeed any of the other markets that I've worked in where regardless of rules, regardless of regulations, regardless of law, you'll always find incredibly smart people wanting to push as far as they can possibly get. And, if you become too successful too quickly, the temptations are clearly there. And the two examples you've given are not dissimilar to examples that I could think of in other market jurisdictions where in many cases, they were doing just fine. And then suddenly they were doing really, really well. And then the temptation's so big not to be able to sustain that. So you start finding ways to fictionally sustain what everyone believes you, given that you initially had some success. And it's obviously tragic. It's obviously a poor reflection on the individuals behind those businesses and indeed the markets as a whole. But it's unfair to generalize would be my main point, because you'll always have such bad apples in any society, in any market situation. And every time we're able to address that, and the UK is a good example, which I'm very familiar with through the codes of corporate governance, going through the nth iteration, usually on the back of another issue, if not another scandal, because somebody else has found another way to try and keep repeating the success that they've enjoyed over and over and that everybody else has enjoyed. And, if you go too far beyond the realms of reality, you end up, making it all up. And unfortunately, because that's not sustainable or particularly clever, in the end, it all comes tumbling down. Of course, it impacts people and reputation. Of course, it has an adverse effect. But I think like the UK, this part of the world has learnt its lessons. Every time we have such an issue, there is clearly a bigger attempt through policymakers, regulators, and indeed the exchanges when it relates to continuing obligations of listed companies, and a knock-on effect to the private sector recognizing, well, let's learn from what happened. Let's tighten up where we can possibly tighten up, but you'll never eliminate the next bright spark having a go because they can have a go and because they can take people along with them and make people believe. But, as I mentioned with the UK in its nth iteration of its own code of corporate governance, we learn, we try to be better. And I think generally most people take a sensible and responsible view to business rather than trying to rip people off, which is essentially the examples that you gave as the genesis. So I hope that's a reasonable answer. But, whether it's here, whether it's the UK, whether it's the biggest capital market in the world, or indeed the next emerging market, we'll always see such incidents. But the point is to take a deep breath, take a step back, learn, make sure that we understand what did go wrong. And often, it's a bit of a similar story wherever you go. I like to describe it, having been a former banker, as overtrading and getting carried away with getting on that nice virtuous cycle and thinking, well, this will never end. You just need to think of boom and bust type scenarios, whether in public capital markets or indeed in any other sphere. It's easy to love, easy to get carried away, and easy to get, really stuck in and thinking this is going to go on forever. It's not how things work. And I describe stock markets as, driven by so many external factors that you have no control over. And as a former IRO, I know what it's like to go through the ups and downs. I know what it's like to be asked, why has the share price gone in the wrong direction rather than the direction that everyone would want? And in the end, it's about maturity. It's about taking a long-term view. And if you're genuinely investing in businesses, whether running the businesses or actually investing in the businesses, it's about disclosure, transparency, responsibility, and doing all the things that we stand for at GCC Board Directors Institute in terms of good practices, if not best practices, learning developing and making sure that we stay relevant for the communities that we serve, take them along with us and make sure that they can do the best possible jobs that they can do in a region that is a sweet spot and will continue to grow for sure.
Yeah, with respect to the governance failures and situations that you described, that they happen everywhere, as John said. We look at these as an opportunity for directors everywhere to learn from them and to not make the same mistakes going forward. So we actually use many of these cases, some of the international ones, and Hassan, some of the ones you mentioned as well, in our director certification. And the participants in the program get to work through them as either a simulation where they don't even necessarily know which company we're referring to. And we ask them, what would you do in this situation? Then we follow up to say, well, this is what actually happened, and it's a really interesting experience for the participants to go through, or whether it's done through a case study, the typical case study that you would do in a business school, very hands-on. But the point here essentially is that we take these lessons learned in the region and internationally and bring them together in one place for the participants to walk away with some level of knowledge or learning, or what would I have done in this situation, or what can we do better in this region, learning from other places, or even learning from what's gone wrong here.
Just off the back of that then, what would you say are some of the common challenges Gulf or GCC boards are facing in this fast-moving world? Like, what do you think some of the biggest challenges are for them?
Well, you gave me, Hassan, the opportunity to actually speak to something that I feel very passionately about, which is board diversity. And John's smiling because I know he's very supportive of this, and I talk about it a lot in the region. But we know, and there's recent research out from Heriot-Watt University and Aurora 50, that board diversity, specifically women on boards, are quite low. The representation of women on boards in this region are really low, compared to other regions as well. We see across the GCC, and we only have data really for at least I've seen published data on listed company boards. Across the GCC, women hold 6.8% of board positions, which is quite low. That ranges from, I believe it's 2.8% in Qatar, all the way through to 14.8% in the UAE. So quite a range, but that average does sit at 6.8%. And this is something that we do talk about in our programs. And we also, as an institute, make an effort to build it into our conversations, if we're speaking in front of an audience, in front of a board, into our content, but also into our research, because we do believe it is one of our obligations to figure out what is happening in the region and share that with others so that we can change the situation or improve it. Now, looking at the UAE with representation that's sitting at 14.8%, it is the only country in the GCC that has a board quota for listed company boards, and that's why we believe the number would, of course, be higher in that case. And we hope that other countries in the GCC follow that example as well. There's a lot of benefit to board diversity, whether it's women or diversity in terms of age, industry experience, sector experience, nationality, whatever it is. There's tons of benefits to it. And the research tells us, there's benefits to decision-making and problem solving, reduced groupthink, increased innovation, representing the market that you serve as well, and understanding the market, because if your board is diverse, your board, your organization, whatever, should be representing the population that it is serving. But one thing that women also bring to boards, which I thought was really interesting in the research that I've looked at internationally, but also in the region, we've been doing research at GCCB. I've interviewed women across the region who serve on boards as well. The research actually shows that women are more likely to challenge in the boardroom as well. And that leads to more, thorough discussion of the issue at stake. It leads to boards considering things from different perspectives and leading to the best possible decision and the best possible outcome. And the reason that the research says this is happening is because women actually don't sit within the social network that usually makes up the boards. They are sort of an outlier or an outsider to it. And actually, people who are outsiders, it's easier for them to challenge because there's less of a social cost to doing so. So from our perspective, we think this is an incredibly important area for boards in the region to be considering. We recommend a few things. The one is looking at instituting board quotas across the region. And like I said, we've seen this actually obviously works in the UAE, and it does work in other markets as well. And eventually those quotas won't be necessary, but for now they are. The second is in thinking about recruiting for board positions. Don't focus so much on your network, because our networks bring in people who are like us. And if boards are primarily made up of one gender, we will continuously bring in that same gender. Instead, work with recruitment companies to look for diverse candidates, but also on the board position itself, post, what are you looking for? And we've seen this at GCC BDI. We get some board postings, which we share with our members. And some of the more recent postings are actually saying we encourage women to apply for these positions. And that demonstrates a commitment and a willingness for the board to be open to have women on the board. And the last thing that I would say is the board chair plays a really important role in this as well. The board chair leads the board, and their responsibility here is for all board members, not just women, but for all board members to ensure that the board discussions are open, that they invite everyone to participate, that everyone's voice is heard, that they're able to contribute the value that they bring to the board. And like I said, this is best practice for anybody, but it's particularly important for underrepresented groups such as women.
I just returned from Saudi Arabia a few weeks ago, my first visit to the kingdom since 2017, and it's been just amazing to see the changes taking place in Saudi Arabia since I last visited about 8 years ago. And one of the key things that I noticed when I was at the airport was the number of women working there. And even if you just go to like banks, even coffee shops, like a retail food and beverage, a majority of the workers were actually women, Saudi ladies. And I was attending the Money 2020 conference in Saudi Arabia, and I got talking to a lot of the different participants, and a lot of the people, and even at mid-level, senior level, were actually women. So it's kind of interesting to me that, or like interesting to hear that women are not really participating or not participant of boards. What do you think? There's like a cultural thing there, or do you think it's just going to happen in a matter of time?
Look, surely there is a cultural dimension to it, and I mentioned I'm interviewing women in the region who are serving on boards, and that's one of the things that most of the women that I talk to just say. There is a cultural dimension to it. But if you look anywhere in the world, men were in the workforce and women weren't necessarily, at least at some point in history. And it just takes time through societal change as things change from policy. And we're seeing that happen in the GCC now, which is excellent. We have a really great opportunity in this region as an institute to make a difference in this area. And that is accepted. It is wanted by the people, and the governments are putting in place policy and strategic plans which actually support that as well. The other thing is, in our Certified Board Secretary program, I teach the session on the impact of board diversity on sustainability and social and sustainability issues, which, I mean, surprise, there's a positive impact of board diversity. And we're looking here specifically at gender, so women and younger people. And in those programs, which are mixed gender groups, there's great interest in this topic. They agree. We need more women on boards. We need more younger people on boards. We actually need more diverse boards generally. And the conversations are so rich. And like I said, through this, our job is to educate people in this. Then their job is to take it forward. And I do feel that society in the GCC is supporting people now to move that forward. And I think that's a great opportunity.
I just want to shift gears a little bit and talk about this new thing that was introduced, I think earlier this last month, was the GCC stock exchange standards with IR. Do you guys have any initial thoughts on what this standards means for the industry within the region?
Yeah, thanks, Hassan. I'll take that one. I think you're referring to the GCC Exchanges Unified Investor Relations Guide.
Correct,
and it goes back to the point I made around convergence and the way the markets work together. And the exchange is a very good example. So there are actually standards across ESG or sustainability reporting, as I sort of referred to earlier, so that the issuers are clearer about which framework, what type of measures might be useful for different sectors, because, we could throw out 100 different acronyms at you and lots of different ideas about what we think is relevant. But in the end, actually, none of it's more relevant than the people at the sharp end running the businesses. And what the exchanges have recognized is, if they offer some form of guidelines across the GCC, given the perception from the outside about, it's a block of markets, isn't it? It is, and it isn't. It's 6 different markets, nationally speaking. But it's easier for the issuers, easier for the audiences to then recognize and hopefully interpret what they require to make their decisions about investment and other things. And the same applies to the Unified IR Guide, where it kind of makes sense, if you're in that competition for attention and capital, to share across the markets what we think the baseline is. So I'm not surprised. And coincidentally, I had a hand in some of the IR guides that some of the individual exchanges produced from 2020 onwards. So there are a number of national IR guides. And it didn't surprise me when one of the markets gave me the heads up saying that, given how many we've written per market, wouldn't it make sense to bring them all together, create a more common standard or common approach to professional investor relations, help build the capacity and capability around those best practices, some brought in from outside, some developed on the ground through the exchanges and their own listed companies, but ultimately to produce a unified guide, not just for the current generation, but going to the point of building capacity and capability to the next generation. So they recognize what the benchmarks are, what the expected standards are, if you want to be a professional IR officer. So wonderful initiative, just like the sustainability guidelines. And I think, very, very laudable from a market development point of view. And it just lastly pick up on the point that Lisa was talking about in terms of diversity and inclusion. I mean, I can happily sit here and say no brainer, right? Here we are in some of the fastest growing economies in the world, in a real sweet spot, trying to go hell for leather for growth, diversifying and everything. And hang on, do we have the critical mass at every level for every profession, whether investor relations, as you're asking, whether sustainability professionals, whether board secretaries, whether directors? No, we don't. So an easy way to begin to address it is just as Lisa said, well, look at the whole community, the whole target audience, as opposed to just a part of it. And the results will tell you the difference. The results will speak for themselves for sure. Over time, not necessarily immediate, it takes time, and we're all part of that, and we're all very excited about the prospects.
Before we look at the future and some of the trends which will take place in the next few years, I wanted to ask you, John, you mentioned a really interesting point earlier on in the conversation was about family businesses and succession. There's been obviously some news, with some of the family-owned companies in the region. How would you say that, or what would you say are some of the biggest challenges with regards to succession in some of these family-owned companies?
Yeah, I mean, I've never been part of a successful family business, but if you look at particular subsets of the markets in this part of the world, as I mentioned, if you look at the ownership structure, often people think it's government owned, and they often forget that actually the majority of the economic activity and the economic growth comes from the private sector through family businesses. Jeddah, which is a good example on the western side of the Kingdom of Saudi Arabia, boasts something like 90% of the economy is based on family businesses, and they might be first, second, third, fourth, or even many more generations. And I think while that's incredible, and actually it's not uncommon in other emerging and developing markets, I think what's exciting for us is to professionalize what we stand for in terms of governance, that is putting in systems and processes to ensure that these businesses remain not just successful, but also responsible. And part of the responsibility of the stewards of the family businesses, or indeed any other businesses, is to think about putting the right people in the right places. And of course, it's easy to talk about succession planning, easier said than done, but it's no different to my organization, no different to any other organization in terms of what if, and what happens next. If you aren't thinking like that as a steward or as a board director, then you're not really thinking in the right way, and you're not really doing your job, which is to ensure the success of the business for all stakeholders. And you can never be over reliant on one person. We call that key man risk, don't we? You need to be thinking about other people, about building a team to ensure that the business can carry on come what may. And the world's full of surprises. You never quite know what's around the corner. None of us has a crystal ball. And one way to address such risks is to think about the organization as a whole, is to think about each role and who should play that role. And by the way, have backup, if not succession planning. So whether it's family businesses or any other business, including our own, we take very seriously talent management, and we take very seriously trying to promote and build that capability and capacity at every level of an organization. It isn't just about the leadership at the top. It's about every layer from executive management through all the other players that play a part in making business responsible and successful, family business or any other business. I suppose in answer to the question, if you think of some of the most successful family businesses, we can all understand if there's an amazing person that's run it for a long, long time, almost irreplaceable, right? But we all have to be replaced at some point or another. So I think you do need to take it very, very seriously, given what I said about the economic backdrop, economic development being reliant on family businesses. Clearly, if they're serious about stewardship, being responsible and sustainable for the next generation and the next generation, then what we stand for in terms of that governance umbrella, stewardship, professional directorship, including taking the responsibilities very seriously, then succession planning is at the heart of it. But the same could be said for any organization.
Yeah, when I asked you that question, the program, I don't know if you've seen it on HBO, Succession, and they're all just hustling against each other, trying to get control of the company, and the old man is still running the show. But I guess, because there was a really interesting article the FT wrote a couple of months ago. It was about Majd Al Futtaim and how the family is going through the succession after the founder passed away. But as we move forward and also bring the podcast to a close shortly, what do you think, or to both of you, what do you think are the biggest challenges for boards and also for the Middle East IR industry going over the next 5 years?
I mean, an obvious one that I share, because I've been an executive for 40 years. And yes, I've played a role on boards, for boards, including right from the beginning, is the differentiation between people like Lisa and I, who are paid executives' salary to do a job, and that's why we're here and that's what we're committed to doing, versus reporting to an oversight board or stewards of the organization in all the right ways, and recognizing the difference between managing versus actually giving the oversight or the governance role to the organization. And I'd just like to give you a quote, because it's very symptomatic here, as it is in other developing markets where the difference between executive and non-executive is not clear. And one of the founding fathers of governance said this, I'm going to quote him, Bob Trick. If management is about running the business, governance is seeing that it is run properly. All companies need governing as well as managing. And I think that differentiation is not entirely perfect anywhere, but I think particularly in frontier and emerging markets, where a lot of the people that have ended up on boards used to be successful executives, letting go and allowing the salaried executives to do their job is quite difficult. And of course, it can cause conflict, it can cause hindrance as well, but there's a marked difference between the two roles. And I think through education, as Lisa was suggesting, through our roles, we can make sure that that distinction is crystal clear, because the only way it can work is if that is crystal clear. We have this expression, see if I can remember it, nose is in, meaning, sniff around, ask whatever, fingers out, back off, let me do my job. By all means, ask whatever you like, provide whatever guidance, direction, insight, expert help you like. But at the end of the day, non-executive means exactly that. You're not to get involved in the running of the business. That's a management job. And that's a function of maturity of the markets that we're in. So I'd say that's a pretty obvious one. And then I suppose on the opportunity side, if you think of technological developments, whether artificial intelligence or anything else, one big advantage this part of the world has is it doesn't have all the legacy systems, legacy issues of old, where it's difficult to respond because you're so invested in the past. And this part of the world is very famous for its national agenda, the various visions for each of the countries, and looking forward rather than standing still. And they have an opportunity to leapfrog given rapid technological development, and they're already doing that. So I think when you think of expert areas like artificial intelligence, a bit like cybersecurity 20 years ago, clearly it's difficult to get to grips with from a board point of view. You're not supposed to know everything. You're supposed to be reasonably informed, though, and be able to ask the right questions. And clearly our advice is always, if you don't know, then find a way to either ask the right questions to the right people, or get some expert help, get some additional input onto your board. Back to Lisa's point around diversity and inclusion, maybe it is a next generation whiz kid should be informing your generative AI plans and strategies. And, above all, admit what you don't know, and whether it's through guardrails for decision making or indeed other ways of ensuring that the processes and systems are in place. As I said, we don't expect boards just because they're at the highest level and setting the tone to know everything. In fact, I think the best boards are often the curious, inquisitive boards who are modest enough to realize, well, actually, this really is potentially material, and we need to fill the gaps, and we need to find the right people to fill those gaps, not just at the executive level, but also from the board level as well.
I was thinking as you were talking about the noses in, fingers out. I mean, strategy is such an important role of the board that in our director certification, we dedicate almost an entire day. And in our diploma, we dedicate 2 days to strategy as an elective. And there's 3 electives that the participants can choose from. Strategy is actually the most popular one because it is such an important part of the role. So like John said, the role of the board is not to do, it's to govern and to make sure things are getting done, and strategy is part of that. The other thing I'd say, things are changing very quickly, and we saw that, and things can change on a whim. We saw that with COVID, we see that with AI, and we also see that with geopolitics around the world and in this region as well. And so, like John said, having the right people around the table, whether it's adding a board member with the expertise that you're looking for, or maybe hiring an advisor for the board to do that, is really key. And I would say, again, similar to what John said, succession planning is incredibly important as well. And as boards think about who the next generation coming onto the board, I really advise thinking about that diversity, whether it's gender or age or experience in a specific sector, nationality. Different people bring different ideas, and that will improve the effectiveness of the board. Full stop.
And how do you think GCC BDI will help expand on this thought leadership and help the region more impactfully?
Well, one of the things we currently do some thought leadership with our strategic partners. So we work with Hydrick and Struggles, which is one of our strategic partners, on a biennial board effectiveness survey where we measure board effectiveness across the region. We are doing the similar with McKinsey. We're in our 3rd year with McKinsey in running a research on state of AI in the GCC, and again, measuring directors and executives' knowledge and experience in this area. Again, we're, as an institute, led by myself, running a Women on Boards research project as well. And so I think our obligation as an institute is, of course, to educate the directors and the board secretaries in the region, but also to bring that evidence behind why things should be done the way they are. So what are directors in the region facing? What are the hot topics? Where are the gaps that they're experiencing on their boards? We can only help to influence and change things if we actually know what's happening. And I see that as a big part of our role as an institute.
And usually the way I finish these podcasts is usually ask, what's the upcoming projects or current projects you're working on? Can you share any projects you guys are working on or anything upcoming?
Yeah, John, can I start? Is that okay?
Yeah, sneak preview, if that's the right expression. So you're about to publish a number of the things you've just mentioned, right? So
exactly.
No reason not to tell the world.
Yeah,
Lisa.
Thanks. They say to say something 3 times so people remember. So first of all, we're doing 3 research projects essentially that will be published by the end of the year. Actually, 2 of them will be published shortly. One, again, is our biennial board effectiveness survey, which we're doing in partnership with Hydrick and Struggles. It's measured board effectiveness across the region, and it's a really excellent survey. This year, we added questions on AI, geopolitics. We expanded out questions on sustainability and diversity on boards as well. Some really fascinating findings, which are actually helping us to drive what we do going forward, which is really exciting. Again, the research with McKinsey on the state of AI in the GCC. So we've measured directors' perceptions, experience, what their organizations and what their boards are doing in terms of AI. That will be published in the next few weeks, I believe by the end of the month. And the Women on Boards research that I'm leading for our institute. So I've interviewed 17 women across the GCC to understand what their experiences are on the boards that they're serving on. And it's really to understand how they got their board positions. What are the motivations behind serving on the boards? What is their experience like on the board? Is it positive? Have they had some challenges? Is it a mix of, positive and challenging experiences? And what do they think we can do? What do they think needs to be done to increase the number of women on boards in the region? So stay tuned for that. That will be published by the end of the year. But separate from that, we're also running in January next year a program targeting board chairs in the region, and we're calling it the Chair Accelerator program, and we're running that in partnership with our partner Hydrick and Struggles. It will be a 3-day program. It will look at board dynamics. The participants will do an assessment, and it really is aimed at taking participants through the very important role of the chair and what they need to do share best practices, and essentially how they can lead the dynamics in the boardroom.
Fantastic. And what's the best way to read your research or find out the latest information?
It will be posted on our website under the research section.
And are you guys active on social media, either in a professional or personal capacity? Are you guys active?
We have a GCC BDI LinkedIn page, and John and I are both active on LinkedIn as well.
Okay, fantastic. I'll link it in the show notes. But this has been a really fantastic and really insightful conversation. I'm glad to see that the IR industry in this region is starting to get some more traction compared to where it was a decade ago. And I'm really happy to learn more about the GCC BDI and what you guys are up to. And maybe in about a year's time or 6 months' time, we can come back and see what the latest changes and updates have been. But guys, I really appreciate you coming on the podcast. And yeah, thanks again for coming on.
Thank you, Hassan, for having us.
Yeah, appreciate it, Hassan. Take care, and we look forward to talking to you again. Thank you, sir.
All the best.